Okay, right.
Yeah.
Okay, welcome to the BDO webinar Rethink series. For those who have been with us through COVID level 4, 3, 2 and 1, you will be used to the series that we had on Reset, where we worked through the wage and salary subsidies, the low interest loans and the various other subsidies and lolly scramble that the government gave us, which is still going through till September of this year. BDO through that series has just been addressing effectively what is Reset, and now we're focusing on, through a framework which BDO is doing globally, the Rethink, and in particular in the next 6 to 7 webinars every Thursday fortnight, we're focusing on resilience. In particular, what does a resilient business look like through this year and the coming couple of years as we traverse the very many impacts that COVID-19 is having on our businesses and on our not-for-profit sector. We thought it would be an extremely useful kick-off start to this series to have someone prominent and well-known who not only has led this country but is aware of lots of things going on internationally. And so it's our pleasure at BDO here, I'm in Wellington, to host Sir Bill English, former Prime Minister, former Minister of Finance and former leader of the National Party, to address the resilience. What is a resilient economy for New Zealand? For those who are familiar with this series, it's 35 minutes of presentation by Bill. We will then be looking for questions that you want to pose. You simply do that on the webinar through the chat. Someone will look at those questions, feed them through to me. I've got my laptop. I've said to Bill, while I might be looking at my laptop, it is not to do business, but simply to look at those questions that you pose, and then I'll pose those to Bill. I just ask, this is not a political motivated series. This is purely looking at business resilience and looking at the economy. So please don't pose a question to Bill like, what would you do if you were leading the National Party now, or are you thinking of coming back into the National Party? We can answer those questions at another time. So I'd like to introduce, known to you all, Sir Bill. As I said, held some very prominent roles, and now relevant too because he's involved in a couple of startups, is also a director on a number of companies. So I think not only that perspective of looking at the economy in New Zealand and looking internationally and thinking of the impact, very relevant because he is involved in businesses like you and us. So Bill, I'll hand over to you and just run through your presentation. Thanks very much.
Well, thank you very much, David. And I must say I'm enjoying the direct and gritty task of working with businesses day to day. So on the one hand, thinking about the macro economy and what's happening in the world, and on the other hand, trying to make some cash flows add up and sustain the jobs and the enterprise that we're involved with. And I'm fortunate to have working with a real spread of businesses, from large retailers through to small data companies and some export businesses in between. So it's a great lens through which to see all these current events. I was trying to think of a couple of key ideas for shaping our thinking about resilience. The first is this: if you think of this shock as like an earthquake. I can still remember a few years back, myself and my wife, Mary, were out for a walk in the hills of Wellington, and the ground was shaking, and we came home and found out there'd been a pretty significant earthquake in Wellington. It was 2 to 3 years before the full impact of that earthquake was understood, even though at the time pretty much everything looked like it had withstood the earthquake. But right now here in Wellington, most of the civic buildings are closed. The library, the old town hall, the city council buildings have been closed. It still are. the point here is that COVID has been a shock. Actually, it has demolished a few industries straight away, education and tourism in particular, and those who service them. But it is going to take some time before the cracks are showing. And part of the job in our businesses is to make sure we're not that crack. That over 2 to 3 years is going to show up. I think the other key idea to keep in mind as we go through this is going to be a marathon, not a sprint. This is the first time that New Zealand and other countries have bounced into a recession. And we've got that sense of bounce, haven't we? You've just got to look at the traffic around the place. Who was it said we'd all going to go green and do everything differently because of COVID? We're all back in our cars doing exactly what we always did, and there's congestion everywhere. But so we've got that sense of lift in a lot of businesses right now. Of course, that was going to happen because you had a dead stop. So you're going to pick up. And the question is, how far back up is it going to come? And how certain is that trajectory? Well, even if we come back to 95% of where we were on average, that's a 5% recession. And we would regard that as fairly serious. And of course, the other factor is to what degree of certainty can we predict that that's going to happen? And I think that sense, the certainty of that is uncertainty is growing. And I just want to go through some of the dynamics of that uncertainty, because from our businesses, we need to look out at the wider world and see what factors are narrowing down the uncertainty and which ones are making it worse. And on balance, I think there's more of them going to make it worse. So the first one is obviously the health issues around COVID. If you look at it from a global point of view, you're not actually having a second wave, you've just got a first wave picking up. It's getting bigger, and the number of cases is growing quite fast. So in our own corner in each country, we've got some ups and downs, but the fact that globally it continues to grow, I think is going to be an ongoing source of uncertainty until that stops, and it hasn't stopped yet. The second uncertainty is just the knowledge about how to deal with it. Now we've had 4 or 5 months on this now, and you can see in New Zealand and in Australia, there's been some pretty hard lessons learned about what it takes to manage outside the context of a total lockdown. The total lockdown is possible, but we know how destructive of the economy that is and of people's livelihoods. And so the challenge isn't so much whether you're in total lockdown or out of it. The challenge is what's the ongoing management regime you need to deal with the health risks, and how can you build public confidence in that? Because when people are confident, they'll act about that, they'll act confidently about the economy. And I think for governments around the world, that's been a real challenge because it's a new task for a start, but also the health risk is dealt with by public health people who don't have a lot of operational experience, and it's taken a while to translate those ideas into actual operational delivery on the ground. Someone standing outside the hotel making sure nobody leaves. So there's progress being made on that, but it's going to be absolutely critical that confidence is maintained. So that's some health issues. Then you've got the tensions that arise from that around the world. So you've seen how COVID, in combination with other things, has exacerbated the tensions with China and the US. That is going to have real economic effect. World trade continues to drop, not just because of the trade war, but also because of the kind of decoupling pressures between China and the US, where they're now both in this process of pulling apart what has been a pretty integrated technology and financial and trade relationship, and all three of those are starting to rip a bit at the seams. And where that matters directly to us is its impact on Australia, where Australia's got some real tension there between the most China exposed economy in the world, and that's working for them actually at the moment. Iron ore prices are going up, and that's going to help them. But they've got this defensive relationship with the US, and they have to walk the line, and we're walking the line somewhat behind them. Another factor of uncertainty is just coordinated recession. We haven't had this before. So again, keep in mind, whatever numbers are turning up in New Zealand, you've got coordinated global recession. Different countries are going to handle that different ways, but while everyone's in recession, it's just a wee bit hard to believe that we're going to be out of it. It's about that simple. And then the other issue is the kind of political unrest that goes with all this, and you're seeing signs of that in the US. The rioting that's going on there now actually has its roots in a whole lot of issues, including still the flow on from the global financial crisis. But this difference between stock markets running at record levels and millions of people out of work are an inevitable ingredients for inevitable political unrest and fracturing, and that is going to make sensible economic policy quite a bit more challenging. So that's a bit of the world picture. If we come to New Zealand and think about the idea that think about what happens when we're in recession and what's different this time. Well, there's the main drivers of growth that helped us the last couple of times don't apply to the COVID recession. Usually what happens in a New Zealand recession is we drop interest rates quite a long way. So in 2009-10, it was about 4.5%, which is quite a lot. This time that can't happen because we've essentially got a zero bound, real concern about what a negative interest rate policy might look like. So you've had a relatively quite small drop in interest rates. In fact, the Reserve Banks had to go to get into quantitative easing just to get its official interest rate translated through into retail rates. With maybe some effect, maybe not. It's a bit hard to tell, but essentially that isn't part of the recipe anymore. There's no more. A bit more quantitative easing may work, but actually monetary policy is not going to help us a whole lot from here. The other thing that usually happens is the exchange rate drops. Well, where is it today? Yesterday, 66 cents, I think. When you'd want it heading to the 50s, into the mid to low 50s, which is what happened the last couple of cycles. So you're not going to get quite that same boost from the export sector. It's holding up, but when you've lost a whole lot of jobs in tourism and education and other related industries, then you need someone generating the new jobs, and actually the export sector is not going to be able to do that. It can hold its own though, and I suppose that's good news. And that leaves you with migration and consumer confidence as drivers. Now we're familiar with that because we've had a fair bit of that in the last 10 years. I think you've got some of that showing up in your housing market at the moment, people coming home, although the numbers aren't quite as positive, aren't quite as large as widely believed. So I think it leaves you with consumer confidence as a driver of growth for now anyway. And you've got a bit of that with the stimulation and people bouncing off the floor and getting out there. But historically, that is not going to last. And here's just one way of thinking about it. There's quite a striking relationship over time, right across the developed world, between government deficits and household saving, and they work in inverse. So when government deficits are large, household saving increases, and that's partly because people intuitively understand what they're starting to think now. If there's going to be huge deficits, somewhere I'm going to have to pay for that through higher taxes, or I'll lose services because they tighten up on public services. So people save more. Well, we're headed into massive deficits, and so I think it's a safe assumption that past behaviour will recur again. That as people see the size of these massive deficits, they behave in the ways that they did before. So households will tend to buckle down in the face of that. And eventually government will have to tighten up as well. and that of course has an impact on consumer confidence. So the point there, I think, is there's no particular free lunch with this. And bear that in mind every time you're hearing about what the central bank can do or government can do for fiscal stimulus. Essentially all they're doing is they're buying a bit of time. Now, for your business, that can be absolutely critical, a bit like the wage subsidy, right? Yeah. So the wage subsidy bought time for thousands of businesses, and you've got to use that time constructively to build your resilience, because you're not going to get an ongoing effect. In the end, with this kind of event, capital and labour have to move from the places where it's shut down and where productivity is too low and we can't compete, to those parts which at the moment is tourism and others, to parts of the economy that are growing, which tends to be at the moment sort of digitally orientated activity. So the capital and labour has to move, and that means businesses failing, and eventually those pressures come to bear no matter what government does, because the fundamentals still apply. You can't just wish them all away. It's going to grind in eventually, which brings me to the approach. How does business build its resilience? Well, look, a whole lot of people know how to do this. New Zealand's got a lot better at it. I can remember back in the recession of late 80s and early 90s, it was pretty bewildering for businesses in New Zealand because they hadn't had to adjust for a long time. There'd been, subsidies and government support and so on, and they were bewildered, didn't know what to do. By 2019, after a couple more recessions, we got pretty good at it. So that's I think a positive outlook for New Zealand's basic capacity to deal with this kind of adversity. But I just thought that there's two or three things that I've found in the work I'm doing that help with that process. One is confronting the fact that it could be really tough. We're in this phase where your lost sales went down, they've come back. People took pay cuts. Sometimes, in some cases, they've been able to be put back. The wage subsidy supported us through the worst bit, and we might be sustainable from here. And I'm just finding businesses are reluctant to deal with the fact that it might drop back again. There might actually be, by middle of next year, 20% less revenue. So can you survive on that? So I think it's really important to deal with the bad case scenario. There's a lot of uncertainty. No one, particularly your accountants, can't hold you, or your bankers can't hold you to, $1,000 plus or minus $1,000 on a cash flow forecast, because they have no more idea than you do. But you've got to cover that bad case scenario. And a lot of people, starting with myself, we're resistant to it. We don't want to have to contemplate that even if things have bounced back, that it might not stay that way. And you'll see this term used a lot more in the next wee while, and that is the W-shaped recovery. And it's popped up in Australia because they've had this surge. It's turned into some, massive retail growth in spending. Yeah. They've overstimulated there. I'm on a board that owns Bunnings, and it's had, record 3 months, unbelievable. No one running that place believes it's going to be like that early next year. First half of next year, we're looking to hit the wall with the mortgage delays. People are going to have to start paying their mortgages. The government stimulus is running down. So, we have to think, everyone has to think through what happens if your revenue drops. I think the second one is knowing your customers. I talked about the earthquake. You don't see the cracks for a while. Well, there's people that you're dealing with, and people who are dealing with you who don't really know the state of your business. One of the odd things about this recession is the way that it cuts across your usual categories of who's hit and who isn't. Unusually for New Zealand, it's not the export sector that's being hit. But if you take, say, the hit on tourism, well, I've come across this already. two businesses can look pretty similar, but one servicing tourism and hospitality and one servicing government. And guess what? The government one's doing fine, and the other one is just hanging on, even if they, even if they look okay. I was hearing the other day about travel agents who've been surviving on the wage subsidy, doing all the refunds, but the wage subsidy is going to run out. They just will actually have no income. And people have been, people have been selling them electricity and coffee and running up taxi bills and so on. So someone's got to keep an eye out for that. So I think drilling down and actually understanding how your customers might be affected, the credit worthiness, which part of the economy they're connected to, is well worth it. You come across these sort of odd stories about how people are impacted in ways that they didn't understand. And I think that means for a lot of us using the toolkit that we've invested in the last few years. So a good example is people investing in CRM and haven't really used it that much. Well, stop spending more on it and get to know how the thing works. Actually build the dashboards, look at them, because often the tech people build them and who really looks at them? Of course, that's very true. BDO, of course, do. But that's what I mean about it's kind of digging into the business to really understand what's going on, because the cracks might show up next year. And of course, the last one is just this, what anyone is on about, I think, these days, and that's cash is king. There's just no replacement for hoarding a bit of cash. Having your lending facilities sorted out, knowing what the bank's limits are, and knowing and taking those seriously. It still surprises me a bit working with businesses how people don't really get to grips with that stuff. And again, some of it is wishful thinking. They kind of wish that wouldn't be the case. It's just a responsible thing to do. Of course, you've got to get out and support local business if you can, but you can't do that if your business is out of the way. So there's a few factors about business. One is run through all the scenarios, including the worst case ones. The second one, I think, is really get to know your customers and your own data and systems that's sitting there that you're using already to know what's really going on. Because even if if you're feeling good now, well, now's the time to do it, because when you're feeling bad, you're going to have to do it. And just keep an eye on that cash. So just to summarise, it's keep in mind this is like an earthquake, big jolt. Some stuff gets demolished, and then we spend the next few years working out which ones have been shaken and are going to be demolished later, and where the cracks are, and get ready for a long haul. We talked about all these factors of uncertainty in the wider world. They are not going. None of those are going away in a hurry. The China-US thing's not going to turn a corner for a long time. There's going to be uncertainty about coordinated recession for years, right? Not just the election or Christmas or next year, but for years. So that's where those are the factors of resilience, getting your mindset and expectations adjusted early on. Thanks very much, David.
Bill, thanks. I'm going to, just before I look at the questions that you've posed, I want to ask a question, and it was probably, you did refer to two businesses heavily impacted, the tourism and the education sector. I'm also aware of a business, I touched on this earlier with Bill, it's a startup, technical, there's a lot of money being pumped into this business, and at the moment the technical skills and expertise is out of Japan and Germany. They're doing a whole lot of stuff virtually, but there is a point, because this is a big factory startup, they need those people on board in New Zealand. So my question is around borders, because we're in a very cocooned economy at the moment. Yes, I know there is some export, a lot of export going on, but actually those two industries, and just using the example of my of the business that I'm referring to, And in fact, they've even offered to pay for the quarantining of people overseas and then here again. So this issue about borders, when can we, what does it look like, and how essential and timing wise to open up those borders?
Well, it is essential. There's no doubt about that. And I think it's one of the bigger challenges for public policy over the next few years is to work out how to manage with a gradually opening border. We're a small economy at the end of the world. We have to be able to interact with the rest of the world, and as you say, you can do a lot of that remotely, but in the end there's some things you just can't do. And over time, if we stay shut down as we are, then in the way that we are, then our ability to interact is going to degrade. You start losing relationships, you start losing markets, and the effect will compound. It is highlighting, I think, a fairly stark divide between New Zealand businesses that are exposed directly offshore and the quite big chunk of the economy that isn't. We've got to bear that in mind, that in the political debate, when they're dealing with this, a lot of businesses don't have to be connected to the outside world. They're not exposed to it. They don't feel at risk. Just wander around Wellington with a big government spending base growing rapidly. They're not internationally exposed. I mean, the risk there is entirely covered by the sovereign balance sheet. People have got the message that that's unlimited, which is wrong. It's not unlimited. And so they're not worried about whether they like the border being shut because it keeps the uncertainties that go with that to a minimum.
Right.
And there's a risk for New Zealand that becomes the political equilibrium. Yeah. That there's enough people who would say, look, don't take the risk. And it's not an unreasonable position. It's just that you can't sustain it for too long. Don't take the risk. We're doing okay. My business is getting along. I see zero numbers come out the other day. Some zero numbers out today about small business cash balances, which are almost certainly wrong. I mean, they're measuring something that's on their books, but they're not measuring the chunks of the economy that have disappeared.
Yeah.
If there's zero, then you don't turn up at zero. So you've got to be careful about that kind of measure.
Yeah.
If you've got zero revenue, you're not in zero.
That's right.
So that's it. So we've got to learn how to open the border up somewhat, and who knows what the graduated steps ought to be. And that is entirely a government issue. Like, no one else can make decisions that are going to affect that directly. And I think we just, business needs to take a sort of forward-looking attitude and start on the process of making those kind of propositions to help move the official system along to the point where they can see the case is building for it, because over time the case for opening the border will get stronger, and that people have got the kind of solutions that will make the risk manageable.
You gave, just before we came on, I had actually posed that question to Bill, and he gave a timing, and I think you particularly identified 3 departments that need to interact: Ministry of Health, MIMBI, and Immigration. And I think, if I'm right in hearing you, that it's most probably still a little out there. It's most probably early 21 that you get the right system, the tracking and holding those people in isolation for still some time. I think you were saying early March might be a timeline to when you could get to.
Yeah, look, I'm not close to the process at all. I don't get involved with government. I'm just making an educated guess at the time you have the election and whatever has to happen after the election, and then it's not long till Christmas. It's a sort of, and then they get going again in late January, early February, and they've got to have a think about it. So you're talking about, March, I think, before there would be some serious consideration. Now, it's possible that in that gap between the election and Christmas, there's some movement.
Yeah.
But it is it's a pretty complex issue. You've got a range of agencies: MPI, Immigration, Health, probably Foreign Affairs, be mixed up in there. And so just getting not just coordination, but confidence in the politicians. Remember, after the election, you'll have a whole lot of change around of ministers. That matters. You just get new people who have to have to get their head around it. That
Get up to
takes
speed.
time. Yeah, remember, it's only a few months ago we thought we might have an Australian bubble by now.
Yes.
You know, I focused on that because I've been going to Australia a couple of times a month for a while.
Yeah.
And no, who would know now?
Yeah, we're nowhere near that now.
You're nowhere near it. So you can see the challenge here.
Yeah. The other question, just before I go on to looking at the emails, is, and I know it's a sector passionate with you as well as that whole not-for-profit, the charities, the sport, the arts, drama, they're hugely impacted. And when we talk about resilience, and I understand that, when we talk about cash flow, actually, lots of these organisations so heavily rely on donations, grants, bequests and the likes. That sector is massively impacted. And when you start to talk about resilience for them, it's a different beast.
It is, and I think you're getting something of the same effect there, where in a business that services a not-for-profit sector for measuring social impact. And what you're seeing there is people a bit surprised that they are able to continue, and that some of their funding sources still, appear to be stable and ongoing. So that's good. I think that's a bit better than they might have expected. But the same dynamics apply, and that is over the next 12 months, 2 years. Can they expect that trajectory to continue? And the answer is, I think not. And it's a sector where there is, the resilience for them is going to be opening, new thinking and open minds about different ways to organise, because the need is going to be higher than it's been for a while. The needs that they're meeting, whether it is for, recreational, social service type needs. If they want to maintain the vibrancy of the arts sector, then a lot of the traditional thinking is going to really come under pressure.
It's going to need a whole new adaptive change to thinking. In
some ways more so than in the business sector, I think, just because they run on thinner margins. A lot of them are running on quite short-term funding cycles. They don't have banking facilities. They don't have equity.
No.
They don't have balance sheets. And in that sense, they're pretty vulnerable. In fact, what I think is likely to happen there is the strong will get stronger and the weak will just disappear. Yeah,
and I think there needs to be some collaboration between some of those organisations, because sometimes they're doing the same thing.
That's right.
They're carving it up. Here's a question with a bit of an international flavour. We've seen Australia take a position around China and the subsequent result in their trading relationship. Given we are predominantly a primary producer, with Asia being our major trading zone for a lot of this output, how concerned should we about some of the current NZ-China tensions which are going on, particularly in the context of unemployment and the post-COVID-19 economy?
I think we should be concerned about it for two reasons. One is that China is not going to be the engine that pulls our kind of economy through a recession like they did last time. At 2019, Chinese growth flowing through to Australian growth and directly into our, particularly our dairy prices, had a significant positive impact in the face of recession and earthquakes. Well, Chinese growth is quite a bit lower. The exchange rate is up, not down. And Australia's got more tension with them probably than we have. And so those positive factors don't exist this time. In fact, there's some negativity. It's going to be hard. It's hard to predict, because just even you think for Australia, they just had a discussion about whether to send ships to the South China Sea with the US, which would be a pretty provocative thing to do, given China's been engaged in provocative behaviour there too. But so Australia's holding back a bit from that. They have been saying some pretty aggressive things about China, and China have focused on a couple of sort of marginal export products where they've put tariffs and restrictions on. The balancing factor is the Chinese need that iron ore. Now, it could be they end up getting it from South America or somewhere else, but for now, there doesn't seem to be much sign that the trade that really matters to China is being disruptive. We, I think, though, do have to think the same way as everyone else. China has become more assertive a bit less economically orientated and a bit more behaving a bit more like a sort of expanding empire, and so we have to take account of that in our dealings. And I think you would find that with any New Zealand business now, that it's not quite the same enthusiasm for the Chinese deal that there used to be.
This is from AFL New Zealand. If there's a continuation of good health in New Zealand and bad health internationally, what are the drastic events this could lead to? So I suppose that's, we're doing all right, Jack, but the rest of the world isn't. What drastic impact is this going to?
Well, look, I wouldn't want to forecast drastic events. I mean, generally, we're in the face of adversity. We've turned out to be more resilient, maybe, than we expected. We do go back to normal faster than you might expect too. But if AFL is Australian Football League, then one drastic event would be AFL coming to New Zealand from Queen. I think it's in Queensland at the moment. Yes. They could bring it here and run it out of Sky Stadium in Wellington. It's about the right shape. Look, no, I wouldn't want to predict the drastic events. What I think you're pointing to, though, is the need for eternal vigilance in New Zealand. I'm pleased that we've got through the stage where we were a bit kind of self-congratulatory and complacent. And I think the system now is much more focused on that kind of daily, weekly threat that this thing could pop up anywhere, anytime.
This is a question directly related to your resilience piece. How do we move capital and labour from sectors such as tourism to digitally orientated activities? Is it actually realistic? And what is the role for government in assisting with that?
Well, some of it is the government just keeping out of the way. I'm a wee bit concerned about the, you should be concerned about systems that randomly allocate public resource to businesses under pressure. They've got to be a bit careful about that. But it's one thing to have fiscal stimulus. It needs to be, like the wage subsidy, which has been pretty well structured, even-handed on reasonably objective criteria, leaving businesses still making their decisions and understanding that it's not going to be there forever. That's a reasonable way to create fiscal stimulus, but taking unpredictable steps to lock people in or prejudge their contractual arrangements, like getting involved in the landlord-tenant relationship, because we all know that's going to be quite dislocated, right?
Yeah.
You can see a few empty places around a few empty shops around the places already. I see in Sydney they're talking about office vacancy rates heading to 15%. Imagine how much that's hugely dislocated in a city. So government should keep that's one thing, keep out of that stuff. The second thing is something we're not that well set up for, and that is providing people the channels to different set of skills. Just when we need a highly localised, sensitive retraining system, the current policy is to move to one national polytech. So someone sits in Wellington and decides what everybody needs for retraining, and I think that's just the wrong direction. Other than that, it's just people facing reality, and these are the real decisions businesses have to make, aren't they? How much debt can I run up with my operating spend on overdraft before I have to stop? Well, those are difficult decisions, but they're the ones that end up shifting the resource. And I think business owners need to think about that. Should I stay here and run my equity right down, or should I shut up shop and keep some? So I go into a coffee shop the other day. This is a few weeks back now. I hope it's better now. And at 2 o'clock in the afternoon, the guy had sold 15 coffees and he had 2 staff there. And you think, well, maybe you should close down, because you were just chewing up your capital pretty rapidly.
Yeah. Here's a question from a doctor. I know you're not medically, though your wife is very. There seems to be an increasing confidence that a viable vaccine will be available towards the year end for rollout. If that happens, I'm not quite sure if that is the real case, but if that happens, how would this affect your views?
Well, it would be pretty damn good, wouldn't it? There'll be some huge operational challenges. You've got if you get a vaccine that's working, everyone's going to want it all at once. And we've yet to see whether it's one that needs to be, you need boosters someone told me the other day, it'll be at least every 12 months. But I'm sure because people understand the cost of things going wrong, they'll get on and do that. I think it would make a very significant difference. You could be quite a lot more positive if that happens.
But of course, the impact is there's already this debt that's coming behind. You still have to pay that back. So that doesn't go away. No,
that's right. It's like the earthquake. I mean, you can get round and get things up and going, but the underlying damage is still sitting there, the economic damage, and that will run on for some time. But you would be more likely to get the kind of growth trajectory and confidence that means you can deal with the economic issues more effectively. So yeah, let's hope that happens.
Question, surprisingly, business failure is at its lowest point in years. This is actually for one of my business recovery partners. Why do you think that is? Is it purely the financial relief packages such as the wage subsidy that's helping at the moment?
I think it's a couple of things. I think that's certainly the case, that the wage subsidy has kept a lot of businesses afloat who would otherwise be out of business or really struggling and complaining about how the banks won't lend them any money. So that's a factor. I think the other one is just this confidence in the V-shaped recovery, and that is people think if I just hang on, I'll get through this, and that's quite a legitimate strategy. I think a third thing is some businesses, a significant portion of businesses adapting pretty quickly. You're seeing people cutting their costs, looking deeply into their processes, getting more efficient. That's helping some through. And then there is a category of what I'd think of as wishful thinking, and that is people who are actually in trouble and aren't facing it yet, and they'll have to deal with it. The big question is going to be, what will it look like in 12 months' time? And I think it's quite an important aspect of our psychology. People have gone from a daily press conference where they were watching the numbers,
yep,
and it's sort of now spread out to a couple of months. They can sort of see to an election, maybe to Christmas, because things feel a bit better. They can expand their view a bit. And then you get into next year, they're going to have to start thinking about 12 months, 2 years. How does this roll out over that longer period of time? And as you do that, there's actually a lot of uncertainty over that longer period of time. The short-term view is giving you a kind of misleading certainty about how the world's going to be.
And that's where I'd contend that you need to do those sensitivity forecasts, the best case, worst case, and really look at those hard.
Yeah, and bring a bit of clarity.
Yeah.
A bit of clarity to it.
This is an interesting question, not something you've touched on. Hi, with the Reserve Bank getting rid of the LVR for both investors and first home buyers, is that actually just going to make the fall even worse? As in the housing market still running hot post-COVID, in particular, he gives an example in Hawke's Bay, we're seeing increased prices. Surely that can't be sustainable once the full impact of the recession is felt. Would it have been better not to reduce the LVRs? Bit of a loaded question.
Yeah, well, look, those guys make their decisions according to the sort of financial stability of the system. So look, I would say that the housing market's turned out differently than everyone thought, or most people thought, say, 3 months ago. I tend to agree with your view that in the face of at least partially closed borders, global recession, unemployment, and government tightening up fiscally, looking out over a couple of years, it's hard to believe that the housing market will stay as hot as it is.
Yeah.
The fundamentals all just point you the other way. Another shorter term factor is that the cost of servicing household debt is the lowest it's been for quite a long time. So it has dropped a bit more recently, and people have responded to that. Well, that drop can't happen again. It's happened. So that lump and increment in value is now maybe is in the market and can't keep going up because there's no more drops in interest rates. So yeah, you're right to be pretty cautious about again the short-term sense of what's happening in that market, giving a misleading sense about what it's going to look like in 12 months, 2 years' time. the Reserve Bank, I don't think the Reserve Bank at the moment anyway will be moving in any direction that makes that market hotter. If I was them, I'd be keeping my toolkit for 21, 22, 23, where you may be, you face some chance at least that you've got a downturn in the housing market and people wanting something that stimulates it.
Yeah, the counter, and this did come from a real estate agent from a well-known, is there's something like 800,000 people overseas, New Zealanders. I know they're not all going to return, but actually they're starting to get interest from New Zealanders saying, I'm thinking of returning home. So that's most probably likely to have an impact. New Zealanders who've been away for years and years, but actually say coming home now is the right decision, and they generally are cashed up.
Yep, and that's I think that's a part of a contributor to the housing market right now, people doing that. And it's all just a question of how much of that there is and how that balances with the other factors. Yeah. So it's certainly in the mix.
Interesting question. How do you see the manufacturing world markets recovering, and is there an argument for a manufacturing world in New Zealand?
There is, as long as it's your capital that you're talking about. So manufacturing in New Zealand is a great idea, or let's hope it would create some high-paying jobs. It happens that our larger manufacturing entities are now all at risk. The smelter, the refinery, New Zealand Steel, just because of the combination of, carbon prices, what's going on with fossil fuels around the world. These are challenges for those big industrial versions.
Yeah.
The lighter manufacturing is, again, great idea, get some better paid jobs, but who's going to actually invest in it? And I have to say, the sort of policy world talking about added value and reshoring and all that sort of thing is all hot air because they're not talking about their own money. Let's set up manufacturing in New Zealand and let's see how long the queue is of people who've got capital to invest in it. I think it'd be pretty short.
Do you have any comments about effective leadership traits for mid-market entities in such difficult times?
Well,
I think he wants an hour on that. That's
look, I think it's you've got to, in these circumstances are just like any recession, a bit less ego, managers, I think, for owners, founders, chief executives, managers, I think clarity and honesty. And what I mean by that is, facing the range of possible outcomes, and actually people in it. I know this is one of the reasons we don't like looking at the bad case scenarios, is it can be bad for morale in the business. So you've got to find a way of communicating that honesty. That is, we need to make, to be sustainable, to be able to ensure that we've got our jobs in 2 years' time. We need to look at the wide range of possibilities that the world might serve up to us. And I think a bit of honesty about that, and certainly from what I've seen, pretty constant communication. And I mean communication in the open sense of respect. Anyone in a workplace in New Zealand is capable of understanding what pressures are on a business and what might be required for its sustainability, and that's how you should communicate with them, not with spin or making it sound better than it is, or too much Pollyanna-ish behaviour, how everything's great now and we're all fine.
I couldn't resist this, so I'll read it direct. Bill, you're looking younger since leaving politics. How do we balance opening our borders to skilled migrants and addressing the rising unemployment rate amongst our existing workforce? Government subsidised retraining seems an attractive option in particular, but with this taking some time to become effective, are we not in the danger of longer term raising unemployment as immigrants fill available jobs before new skills can be learned?
Look, I'm pleased you raised that issue, because that is the flip side of the border opening argument. we've gone from, taking out returning Kiwis, we've gone from significant inflows, net inflow of 50,000, 45,000 to zero. And that has, in a sense, resolved every worry that any New Zealander ever had about immigration. It's stopped. It's zero. There is no immigration. And any opening up of it, of immigration itself, is going to be in a context where people are worried about exactly the issues you've raised, and that is what's happening with unemployment. And this is what I mean about sort of partial reopening, because that is a political pressure. It's one that it's inevitable, and you might have to do, for instance, make distinctions between the kind of short-term business-orientated flows, like the technical guys coming in to deal with the factory, the exporter who's, like companies I'm dealing with, where the relationship is critical and people over there are losing their jobs, and the best thing you could actually do is get on a plane and go and see who the sales manager is now and get talking to them so they understand understand the product and the history of the relationship. So maybe you can create a category like that. I mean, I hope that this is what the policymakers are thinking about right now, because from a business point of view, that would be a good first step. Some aspect of the Australian bubble, even if you don't go straight away to migrants coming in. So it's going to be a long, slow job.
From Ken Rogoff still pushes for negative rates, saying -3, -4 in the States. And what happens internationally is likely to come here. How likely do you think it is, and what implications for the New Zealand economy would be?
Look, I'm no expert on this. I have spent a lot of time arguing with one or two people who are strong advocates of negative rates. The one possibility would be negative wholesale rates without getting negative retail rates, and that is actually possible from what I can see. So you could get to sort of -2, 2.5 with retail rates, 0.1. The argument against it has been put the argument's been put by the Governor of the Reserve Bank of Australia has been really clear about being against it. Our Governor's sort of left it on the table. And he's against it for a number of reasons. One is they think negative interest rates are a really bad signal to consumers. They see that to think, well, we're really in trouble. And there actually is work now that shows that when you get below, I think it's 1 or 1.5%, instead of having the effect of enabling more free cash flow in households, they respond by saving more. And you can imagine that with, people of our demographic.
Yeah.
And I think, my gosh, am I really going to be able to live on $15,000 interest off $1 million in the bank? And the answer is no. I'm going to need more in the bank, or whatever the number is. So that can have a negative effect, right? So, and the European experience has been at best ambivalent, because they have run negative interest rates for a while. You've actually got negative real rates on 10-year US bonds, and I'd have to say, you look at that and you think that's a worry, right? You're getting negative interest rates on a bond that matures in 10 years' time, against a background of huge US deficits, and probably means a weak US dollar, a high dollar in New Zealand. None of that looks that good. So I think that's the fundamental, my sort of intuitive reaction to it is that negative rates are a really bad signal for business and consumer confidence. And I think you might get some gains from them, but they're not clear enough to warrant that move.
Do you think actions like the increase in minimum wage and a promotion of a living wage really create stimulation of the economy or increase joblessness in this difficult economic environment?
Well, this is the difference, isn't it, between if an economy's got steady and predictable growth, then you can carry the uplift, the cost uplift of those kind of policies. And when it's negative, it costs jobs. How many businesses are out there now, and more in the future, in my view, are trying to work out how to pay the wage bill? So it's a good times policy, and we're not looking at good times.
A couple of questions just before we wrap up. With New Zealand looking a lot more appealing at the moment than the rest of the world, potentially causing more people to move back here with not a lot of people leaving, what kind of impact do you think this would have? So these are New Zealanders returning home.
Well, hopefully positive impact. I think it does, though, underline the need to get on with some of the stuff that's been discussed around the building of infrastructure, because if New Zealanders are coming home, that means further population growth, and I think we've grown about 1 million in the last 15 years. So there's plenty to get on there and do, and that whole infrastructure sector is actually in quite a mess at the moment. It won't provide shorter term stimulus at all, because the projects aren't even lawyer ready, let alone shovel ready. But you know, it's a positive economic effect if they're coming back. We just have to you know, keep up with that kind of inflow. Hopefully they'll bring some capital. That would be good. Yep. Because we can, you know, and innovation. I mean, one of the reasons we keep our borders open is because historically we've imported a lot of our innovation with foreign capital. The Productivity Commission reports recently show that. So if we're not getting the same with foreign capital and also skills, so if we're not getting the same inflow of skills from migrants, then we need to be getting it from returning New Zealanders, because that's what keeps our economy energised and innovative, and we're certainly going to need to be over the next 10 years, particularly to pay back that, deal with that mountain of public debt that's coming our way, and the taxes that could come with it.
And the final, at a global level, could we expect a rise in protectionist trade policies that might impact our export competitiveness?
I think you're seeing a reduction in world trade, not so much directly because of protection, but because of the realisation that global supply chains in some cases have been a bit brittle, and also because of this China-US tension. Now, I'm a bit more optimistic about that than most. There's gains from trade. People don't give those up easily, and and I think you're seeing that the same reaction now as after 2010. Remember the last recession, we all thought there was going to be quite a clampdown on global trade and a lot more protectionism, partly because, and then Donald Trump's rhetoric about it. It didn't quite happen on the scale that people expected. There was a bit more of a focus on everyone else saying, well, actually, if the US is pulling back, then we want to step forward. So I would hope that dynamic applies. We don't get too much of a reduction in world trade, because certainly for New Zealand, we're absolutely dependent on global supply chains. We need them to be working.
Bill, thank you very much. That brings us nearly to 10 o'clock, so just for me to conclude, I agreed with Bill. We had a discussion at the beginning, and he's agreed to come back on a quarterly basis. He said, so you're trying to hold me to account, Dave. That's what accountants do. We do we do that very well. So this webinar series will continue. There are another 5 or 6. Next one is in a fortnight. Spiro Anastasiou from Senate he's done a whole review of all the various surveys and polls going on at the moment, which changes nearly daily in the lead up to the election. So he's going to give a take on what his views, as it looks like it's going to unwind potentially from his view. So that's in a fortnight Thursday. We then have a whole series. Just to remind you, these are recorded and then uploaded onto our website. So if you want to share that with any of your colleagues or a wider base, please do so. That's www.bdo.co.nz. That's where you'll find that. It just leaves me to thank Bill very much for your insightful presentation. I knew actually the questions are still rolling in. We can pick that up on the quarterly where we'll go, no, that didn't happen, that did happen. So thanks very much, Bill. Look forward to seeing you at the next one in a fortnight and you coming back in a quarter's time. Thank you.
Thank you very much.
Thanks very much.
Thank
Cheers.
you. Great.